Hello, this is Howie, and I'm here to help you win with money. Today is a down day. You guys can see that from here. So, what that means is I did not do any cover calls. I don't like selling or writing cover calls on a down day because I do weeklies. Sometimes I go out 2 or 3 weeks, but I'm not going to do that today. So, but what I will show you is I can still manage other positions. So that's what I'm going to show you now. And for today, we're going to do this one. Let's take a quick look at Visa. If we have time, I may try to see if I can clean up maybe an SPY. There's an earnings season for Microsoft, so this is the premiums are really high, so I'm not going to be able to close that out. So I'm going to have to wait. But for right now, let's just take a look at Visa. We may get to the SPY. So first thing we do, let's log into our account. Let's go find what we're looking for. You see the SPY, we may look at that, and then let's take a quick look. So what I like to do is I just like to hit a button here, doesn't matter which one, close a row. I like to go here. And then what we're going to do is let's first figure out what the cost is to row. So we're looking at November 20th, select all 4 legs. This is an iron condor. So let's hit the close button. And it says right here. So here's the numbers. So the next thing we need to do is, hey, did we make money on this? And the answer is sometimes you don't know. So what I like to do is, you see these numbers here? I'm going to show you what I do using my trusty spreadsheet. So I got my trusty spreadsheet open. This one's going to be Visa. We're doing November 20th. And then the first thing you want to do is, let's plug in the original premiums that we got. And so I like to put the higher number on top. So this is the put one. I got $1.26 here, $1.25 there. The call one is, again, I'm grabbing it from here, what you see there, and I'm typing it in 238 1.68. Okay, so the first thing it tells you is I received $1 in premium. And if you want to know, look, I'm going to use the last, but sometimes these numbers are not going to be totally accurate, but it's close enough. So I want to show you what this means. So if you're closing it for 70, this one you're closing it or you're getting 48. This one here you're getting, is it 0.19 and 0.13. So what does this mean? This means it's going to cost me about this much to close. I want to make sure I did the numbers right. 28, yeah, it's about right. 28 to close right here. And then so the profit margin is saying, you see, if you're getting 31 cents or $31 to close out of the 100, it's about 30, right? 70% profit. So why is this important? Normally, when you sell options, all you need to know is if you sold it for $2.38, you make money if you sell it for less. But credit spreads are not just the downward movement in the price of the option. It is the difference between the short leg and the insurance leg, right? So this is a 22-cent spread. And then you got to look at what was the spread originally, right? And that's between here and here. And that looks like a 31-cent spread. And over here, right, it's the same thing. So if you're not good at math, use a spreadsheet, plug it in, figure it out, and then you can say, hey, this one's worth it to close. And I did that with another one. You see, you plug it in, the profit margins are smaller, but I already did it for the SPY, but it's still worth it to close this and roll it out another and create a new one. So let's see what we can do here. So let's hit the refresh once just to make sure the numbers didn't change too much. I'm willing to close it, pay the 31 cents. Let's try. Sometimes I like to go a little bit under first, see what happens. And then we hit our place order. So I took the SPY one and I just updated the numbers from what I see. Based on the last value, it's going to cost me 81, a little bit more higher, right? It's saying a little bit higher than the bid ask here. But you can see what it tells you is the profit is smaller. So I have to make a choice. Do I want to close it or do I want to wait a few more days, let some more time to go on? Now, you got to look at the price. It's $37 away from here, which is safe. And on the upside, you're fine too. So there's no urgency to close this. We'll let a few more days pass before we manage it again. Okay, the orders is empty, which means it showed up. And there you go. We cleared it out. Cost me $30 to close. So that was this one here. Instead of 28, cost me 30, right? So I'm just going to manipulate the numbers. You see that? So my profit minus commissions, this is the ballpark that you got. Next thing to do, I'm just going to update my spreadsheet real quick. I'm going to copy this row out and move it into my closed position here. This is something new. I just did that recently. I don't care about the coloring. But anyway, I closed the position and I updated it here, put some formulas in. The only thing I did not do is I need to add in some formulas for the number of contracts and what it really costs me. So I may put that in there. And I'm going to probably do the number of contracts times $1. So it handles both sides, round trip. Okay, I did the formula, and if we know it works, there you go. The value should go down, and there you go. So just getting smarter with Excel, keeping track of data. So now what I want to do is create a new position. The whole purpose of closing it is not really to just exit out. I like to open a new position. Again, the purchasing power, I don't have a lot, but you guys see what I'm doing. It shows you that trading options can be done with fairly small accounts. I mean, this side is not large, but I'm using this for mostly cover calls, right? I own 100 shares, and then I'm going to use this for my Iron Condor. So let's do that now. Let's create a options trade. I like to do Visa again. Like to do Iron Condor again. So now you pick a date. So hang on a second. Let's see how many days out that would be. So we're looking at some odds here, and I think we're going to pick a put side here at the 177 mark. Well, we'll go a little bit lower. We may go down here, 165. 7% probability, which is really low, but I'm doing this in case of volatility is still increase and that I expect a market to drop. So I may do that. 165, $5 spread. We'll do a 165, 160, and then on the upside we'll figure it out. So on this one, because I'm doing a single contract with one, I'm going to go higher risk. I actually did an earlier Visa Iron Condor today because I was rolling one with 5 contracts. But today, this one, only 1 contract. I may actually go even closer down here, right? Where instead of going out here where you don't get a lot of premium, since I'm only doing 1 contract, I'm only risking a $5 spread, so I'm on the hook for $500. So I may go down here, right? Either 210 or maybe a 207. So let me just plug in the numbers and see what they say, and then I'll decide. I plugged it all in, and this is what I see. So what does this make? Does this make sense? Well, my credit's a little bit lower than I want. Most people on a $5 spread shoot for $1.30, $1.40 in credit for the risk return rate. The other thing I want to show you is, so here's my new one that I just created right now. It's different from this one that I created earlier today. I went with a lower one here, but I want to go much higher risk on the upside. And so what that tells you is my midpoint is a little bit lower. You see that? So right now is what I'm saying is I'm skewing this. This Iron Condor is skewed to say, hey, I'm closer to the upside than the downside. So I'll have a little bit more protection here, but obviously I'm at more risk on the upside. And I'm okay with that because I have a lot more risk over here too with the 5 contract. So what I'm going to try to do is make some money here on this one to sort of pay off. And like I said, I closed the other one, made some profit. I'm going to make another one here. So let's see if we can collect the $1.30 first. Let me see what the numbers are. Dollar credit. Let me try that. I don't think this is going to go through, but we'll try it. I may be happy with this. Again, it's smaller from a risk reward. I'm not making as much reward, but I'm okay with that. Markets are volatile right now. Well, after looking at the numbers, I don't think we're going to do another trade. Just not enough profit margins. So that does not make sense for me to, reap a 20% margin or 25, right, when you factor in our commissions. So I may hold off. I think I remember saying that earlier in the video. We're going to hold off on this one. And you see the trade order just went down. That means the trade went across. Wonderful. Exactly what we wanted. And I'm just going to show you the confirmation details. Here you go. Sometimes I just push multiple times. We'll clean that up. But you'll see, here you go. I created the new one. These were the old ones that I closed. So there's a reason for this, right? Let's do some of the math again. So the one we closed had 24 days left, and I closed it for 30 bucks. So you know what that means, right? How much are you earning per day, right? It's pretty easy. 24 days, well, 30 bucks divided by the remaining time, 24, right? $1.25 per day is all you had left. So does it make sense for this to slowly go to zero, right? The number of days, as the days go from 24 down to 1 to expiration. The value of the contract was $30 as of today. And I already showed you that I reaped the profit, right? I reaped 70%. Why do I want to wait 24 days to reap $30? So I end up closing it, just created a new one, set it out to 38 days, right? So if you do the math again, so we just collected another $100, right? That's a new value. We set it at 38 days. So if you can do some basic math here, what that tells you is so the new contract is already worth more. You see that? In 38 days, if you let it go to expiration, right, I'm earning on average, and I know it's not, remember, we always say this because we all understand it's not a perfectly flat line. In the beginning, the time decay is not as large, and so you're only making 10 or 20 cents a day. As time goes on, you're making more per day. And you see, that's why most people use this number around 50% profit margin. So somewhere around 25 days, sometimes it's 28 days, sometimes it's 21 days, sometimes it's 18 days left. You can close your position because you made your profit. And you saw my previous one, 24%, 24 days left, and I was already at 70% profit. So in the math, if this goes from 38 days, and let's just use 21 in the future, right? It's the same concept. If I reap most of the profit between these two dates, this is the reason why people close and open a new position, right? I want to try to maximize how much money I make per day. It doesn't make sense for this contract to go to zero. You can just open a new one, and that's what I just did right now. And you saw my confirmation. So I collected another $100. And here is the updated portfolio. You'll see everything is now in here. And then the Visa is there. The cash, while it says it's going up, you don't really see it. The impact sometimes is you don't even see it in the buying power, because every time you close one and open one, you're really not going to see it. So sometimes it does take time before you start seeing all your profits. I mean, it's there because you can see it. The cash value grows over time, and so does the buying power. And so this is what I did on a day where the Dow was down, 6, 7, 800 points a day. You can still manage positions. Sometimes it puts things right at the midpoint of my iron condors, or if you're trading spreads. So sometimes you have to figure out what to trade, and this is what I did today. If you like what you saw, don't forget to like, subscribe, and tell your friends. I'm here to help and share all the things that I do because I believe in making $1 at a time, and if you do that consistently, right, profits are profits. You're not going to be upset if you always make a profit. You do it consistently over time, you're going to make money. So I'm glad I was able to get some trades in today, manage my positions. Definitely this week is going to be a lot trickier, so we're going to keep an eye on the market. Anyway, hope you like it. Stay tuned for another episode next week. And as always, hope you have a profitable trading day.